Bevan, thank you very much for your time today. It's been fascinating listening to you and your team talking about the markets and where things are going.
Great.
I was particularly interested to talk to you about interest rates in New Zealand and your expectations. You said today that your forecast for the first OCR increase is December, and you're probably the first one. You've got the earliest prediction of anyone.
I know. Hawkish person and most hawkish person in the market. That's quite unusual, isn't it?
So can you tell me why you've got that position?
Look, we've seen the currency come off a little bit recently, and look, the Reserve Bank's been between a rock and a hard place, I guess you'd call it. You know, we're seeing a stronger housing market, but they haven't been able to respond to that because the currency's been strong, and generally the economy's been up until now sort of relatively soft as well. So I think by the time we get to the end of the year, there will be clearer signs that growth is turning up and is going to be a bit more robust into next year. And if the exchange rate is still at around current levels, or even better, even lower, then I think there will be an opportunity for them to raise rates then.
And how high do you think rates will go in this cycle, and when do you think we'll reach the peak?
Look, we still think this is going to be a relatively low interest rate cycle, just not as low as they are today. We've got a peak for the OCR in about a year after, or about 18 months after they start, of about 4.5%. Now that's our, latest new normal estimate of where we think the neutral rate is for New Zealand. So I think that's going to be the first point for the Reserve Bank, because they'll start tightening, and then they'll want to get to a point which we think will be wherever neutral is. We don't know where that is now, post GFC, and then you can afford a bit of time then just to watch and wait and see what happens before assessing whether they need to go any higher.
And with the macroprudential tools, there's some talk that the rates won't necessarily go as high as they have previously. What's your view on that? Yeah,
look, I think there's a case can be made for that, but it's still yet to be proven. We're just not sure exactly what impact the macroprudential tools are actually going to have. I think a bigger factor in terms of our low interest rate cycle this time around is the fact that fiscal policies, we're going to see a negative, fiscal impulse over the next cycle, as well as the government continues to get spending under control. That's more of a, I think, factor for our low interest rate expectations. But it could well be the case that that macroprudential tools are highly effective, and it does limit the need for higher interest rates to some extent.
And we might hear about these tools quite soon. We're weeks away.
That seems to be the news at the moment. Yes, is the expectation is that the bank's pretty close to deploying their new tools. We've got no extra intelligence on that than anyone else has. So but in general, I think it's a good thing. The only question still is just how effective are they going to be?
Yes, time will tell on that one. And with your December increase prediction, how comfortable are you with that?
No more or less comfortable than with any projection, I guess. No, look, I think, as I said earlier, I think that the key thing is the currency. If we see the New Zealand dollar higher again from here, especially towards the end of the year, then I'll happily join the throng and move out to March. The Reserve Bank in their last statement was expecting September next year, and I just think that's too. I think we'll need higher interest rates before then. But a lot will depend on just how effective these macroprudential tools actually are.
Well, we'll be watching that very closely. Thank you very much for your time, Bevan.
Thanks, Phil.